Hi guys, today we're going to discuss RTP Jan 2025 of Advanced Accounting. I'm sure you all know or you should be knowing that along with your preparation, RTP is very important. Our goal today is within 90 minutes approximately to complete the whole RTP. I'm not going to solve everything, I'm going to discuss the RTP questions. Before I get into the RTP, for those of you who are like, sir, in this RTP, tell me what are those important and new questions? AS 16, 20, 22, 29 and 23. All these are new questions added in the RTP which is not there in the study material itself. That means we have to spend more time in these questions compared to other questions which is already there in your material. Before I get to the RTP, which I will be starting off first with the new question itself, AS 29, let me share a few free resources with all our students who are watching on YouTube, which will help you for your preparation. First, we have Advanced Accounting Marathon, which already has 30k plus views online, which is there in our channel. You just have to go to the channel, go to playlist, and once you find the playlist, we have something called Marathon, where Advanced Accounting is available here. Law has 55,000, Audit has 20k plus views. You can use these marathons if you need them. Second resource, one of my most favorite, is Accounting Standards Capsule Revision. If you already know them, it's fine. Again, you come to the channel, go to playlist, and you come down, you will find this capsule revision, the word capsule. Basically, most of the accounting standards I would have revised in 2 to 3 minutes. Whenever you're traveling in bus or train, or let's say you have 5 minutes time, instead of seeing reels, you watch this quick revision, AS 17 in 4 minutes, AS 12 in 5 minutes. I will keep updating all the AS. Almost everyone are there here. Next, ensure in the description of this video, there will be two important links. Advanced Accounts Expected Questions. Last time, out of the accounting standards which came for 38 marks in exam, we guessed 28 marks correctly. So I'm not saying only study that, but at least don't skip that. This time for Jan 25, in my view, AS 28 impairment is a little important. Then last one, first time newly I'm preparing a new questions list for Jan 25, where in every standard, for example, in consolidation, we have a sum called Variety Limited Illustration 5. That is the only new question in new syllabus. Remaining all are old questions carried forward. So I have given a PDF marking all the new questions in all chapters in full syllabus. So all those new questions, you can ensure you will learn those also, because ICA tend to test those more. Sir, I want your full advanced accounts class, whether for Jan exams, May or September later. You can just go to our website, thecaclassroom.com, and over here, if you're writing in Jan exams, because we have less than 30 days left for exams, we are giving all the class at discounted prices of 1000 rupees per subject only for 30 days validity. But if your exam is in May or if it's in September, it's again back to normal price of around 4k, or if it's foundation not for you guys, or if it's CA final later after you clear, if you need final recording also is available here. Enough, sir. Let's get to the RTP now. Free resource shared. If you're fast forward now, this is the place where you should be landing now. Advanced Accounting RTP. We will start off. We will start in reverse. I'm starting in reverse because AS 29 is the first question. Recording students I'm addressing to you, but here also we have 3 of our friends who are sitting here. We are recording this on a Sunday at 9:30 p.m. guys. Look how serious everybody is. I am serious on Sunday night. We have 3 students here, Sanjay, Harish and Sanjeev, who are here on Sunday night. That means you have to be that much serious when you are doing the RTP. I will be talking to them. They will also tell us, is the speed okay, not okay, if it's fast or less. Okay, fine. We will start off guys. Question 29. During the year, QA Limited delivered manufactured products to customer Q. QA is a company that delivered some products. The products were faulty, and on 1st October, customer K commenced legal action against the company claiming damage in respect of loss due to supply of faulty product. Like I said, 4 new questions. 29 is a new question, not there in study mat. Okay. So what happened so far? Company sold some goods, customer got angry because quality is not good, he filed a case. Upon investigating the matter, QA discovered that the products were faulty due to defective raw materials. Fault is with QA only. defective raw materials from supplier F. Therefore, on 1st December 2023, the company commenced legal action against F for damage for defecting for supplying raw materials in faulty ways. That means the company got angry. On whom? The person who supplied raw material. We are calling him F. F has failed in supplying good quality raw materials. Company filed a case. This is not about the customer. Now QA has estimated that its probability of success of both legal actions. Now QA has two cases. Company is QA. One, the company filed against F who supplied raw materials. One, Mr. K has filed against the company for defective goods. One case on me, one case I filed. Are you following, guys? Okay. The probability of success of both legal actions, the action of K against company and action of K against F is very high. Logical. Customer will win against company. Company also will win against the supplier for company. Are you following? Okay. On 1st October 2023, K has been estimated that the damage it would have to pay K to 5 crores. Who is K? Customer. I have to pay the customer 5 crores as damage. Then this court is still yet to decide. Then the estimate was later revised to 5.2 crores on 31st of March and 5.25 on 15th of May. This case was eventually settled on 1st June when the company paid 5.3 crores. That means if I prepare a timeline, if you look at this timeline, guys, 1st October, the damage payable was 5 crores, 1st October 23. Then 31st March 24, it was 5.20 crores. And then 15th May 24, it was 5.25, and finally on 1st June 2022, RTP we have found the mistake. Okay, first mistake in RTP spotted, guys. It is what? How it can be settled on 1st June 2022 if the case is in 2020? Time travel panirkan. Has he done time travel, guys? It is 1st June 2024. We are the first to spot the mistake, guys. Put in the comments. When the company paid damage of 5.3 crores, they paid to K. Okay. Now, what happened? Yeah, this is the case. This is with respect to what company had to pay. With this, the provision concept is over. We are in AS 29. Provision is over. Should I create provision for this? Yes, during the year. Let me go to second part of question. On 1st December, QA had estimated it would receive damage of 3.5 from F. I will also get 3.5 crores because my supplier gave bad quality. This estimate again revised to 3.6 on 31st March, 3.7 on 15th May. This case was settled on 1st June. Exactly same day, 2024. Again, printing mistake. When F paid 3.75. So I got 3.75 crores inflow. This is a contingent asset. Okay. QA had in its financial statements for the year ended 31st March 2024. This is the year ending. For year ending, I have to create a provision and I have to see if I have to have contingent asset. For the year ending, provided 3.6 crores, sorry, for the year ended 31st March, provided 3.6 crores as the financial statements were approved by board on 26th April. They are bringing in AS4 also. They are bringing in board approval. So board is approving which day? 26th April board has approved. So what are the questions? Have you understood the facts, guys? The fact is, company filed a case against someone. 3 times they estimated during the year, settled on 1st June. Similarly, contingent asset, 3 times estimation. Finally, I realized the money. In middle, there is a board approval date also. What is my board approval date here? From 31st March to 26th June. Hardly 26 days only. This only is events between balance sheet date and approval date. What are the questions? One by one. Whether the company is required to make provision for the claim from customer K as per applicable AS. Yes, provision you have to make. If yes, please rationale the same. What would be the amount of provision they're asking? 4 amounts I'm giving you. 5 crores, 5.2, 5.25, 5.3. First 5.3 will not come. That is settlement amount, which happened on 1st June next year. I want to find provision as of 31st March. I want to find the provision. Correct? Second, can I take 1st October? That was the provision on 1st October. But later you only revised on 31st March to 5.2 crores. So I will take 5.2 crores. Sir, again the provision on 15th May has changed. Provision na, it is meant to change. But look carefully. 31st March is year ending. 26th April Board of Directors approved. That means as per AS4, the scope of events only till here. The estimate is changed on 15th May after board approval. So if something is happening after board approval, will you consider? No, we will not consider. Therefore, as of 31st March, latest available provision is how much? 5.20 crores. I will create provision for how much, guys? 5.20 crores. I am going fast. RTP, I will go fast, guys. Are you understanding? Okay, I will just doubt. We will come to that. Okay, so 5.2 crores as of 31st March. Whether it's material, immaterial will not come here because it is anyway going to be an adjusting event because it happened on 31st March itself. And nothing happened in this period. It happened only later. So anything happened after board approval, out of the scope of AS4, out of my accounting scope. Second, if the answer to above is yes, yes, I will create provision. What is the entry to be passed in the books? What entry I will pass? P&L account debit 5.20 crores to provision. I'm creating provision now. So to provision for legal case. So basically I will create a current liability and debit my P&L. Are you following, guys? Everybody understanding? Last, what will be accounting treatment of action of QA against the supplier? I have to receive money. This is a contingent asset. Do I record contingent asset in the books? No. What is accounting standard saying? Contingent asset will not be recorded in the books. Only you will disclose in the director's report. Not only in the notes. You will disclose in the director's report. Are you following, guys? We have all this in our accounting standard material. Are you following, guys? So to summarize, what is the summary of this, guys? First case, provision will be made. Provision is made for 5.2 crores. Not any other amount because this is as of 31st March. Sir, what about referring to the 15th May date of 5.25? I will not take that because it's after board approval. Entry will be debit your P&L and create a provision for the same. Second, will you accounting treatment for contingent asset? A contingent asset will not be accounted. Whatever you think is receivable, you will disclose in the director's report, board's report. Are you guys following? Any doubts so far? In board's report, what amount I will disclose? I will disclose whatever is there on 31st March again, which is 3.7. His question is in board's report, what amount I will disclose? 31st March, 3.7. I can't put 15th May because 15th May is after board approval. Are you following, guys? This amount I will put it over here. Are you getting it, guys? We will go cross-check the answer once. Actually, amount is not needed itself as per 30 is very high, no concrete evidence which makes inflow, therefore it will be considered as contingent asset and only shall not be recognized. That's what we discussed. Both report any amount is fine. P&L debit to current liability 5.2 create provision and the reason. Are you following, guys? Okay. Next we'll go to next question. I'll open two PDFs. So question answer we may not scroll every time. Okay. Next we will go to question number 19 AS26. Quickly read this. In this gap, let me open the copy of this. Yeah, that's it. So it's easier to just scroll. முன்னாடியே பண்ணிருக்கணும். Okay, fine. We will get back. Yeah. AS26. We're just going to go in reverse, guys. AS26. During 23-24, an enterprise incurred cost to develop and produce a routine low-risk computer product as follows. What they're saying here, there is some completion of detailed program, coding and testing, other cost, testing cost, all of this. Some cost is given. This is a new question added in the new study mat. Came to RTP also. Okay. Now what they're saying, guys, After completion of phase 2, it was established that the computer software is technically feasible for the market. What amount should be capitalized? Wherever you studied, AS 26 talks about two phases, research and development. Any expenditure in research will be debited to your P&L account. Any amount in development will be capitalized to the balance sheet. This is what we would have discussed always, guys. So in this case, look at this. After completion of phase 2, all these technical terms I don't know. I don't know what is testing. I don't know what is development. Who knows this testing, coding and all? That's why I came to CA. Okay. So they are saying after establishment of phase 2, it was established that the computer software is technically feasible for the market. Technically feasible for the market. Under development, there are some points. If you see under development, what are those points? They will say when asset is technological feasibility has been met, then development has started. Okay. So after phase 2, up to phase 2, after phase 2, the first two things I will debit to my P&L because it is still research phase. Only after phase 2 it is established that computer software is technically feasible. That means from phase 3 only development started. So phase 3, phase 4, phase 5. These three, 42,000, 12,000 and 13,000 is my development expense. So I will debit my balance sheet and create an intangible asset, intangibles under development. So what about phase 6 and phase 7? You will not forever develop. Once you develop some things, once it's ready, you will start creating copies of that. It becomes inventory. Sir, how do I identify that in the answer? I'm going to be exam oriented. Whenever they give units, they have made 2000 units, duplication 2000 units, packing the product 1000 units. That means these two is cost that will go to my AS2, which is inventory. It will go sit down. So the first two goes to P&L, next three capitalized, last two inventory. Are you guys following? Any doubts so far? Okay. We'll go to the next question. Yeah. Till here have you all understood, guys? Perfect. Okay. So we just finished these two questions, guys. Let's go to the next question, AS24. What are the disclosure and presentation requirements of AS24 for discontinuing operations? And give 4 examples of activities that do not necessarily satisfy criteria paragraph 3 that might do so in combination of other circumstances. No worries. We have our AS material. Okay. For those who don't have it, free soft copy is there in the description below, guys. Each standard 1 page. This time, this is the last time for Jan 25. I'm going to give this AS material. Next time we will do this in color. But next time I don't want you to wait for color. You should only wait for the final color book. Okay. Now, in the book I would have mentioned examples of activities that do not necessarily satisfy criteria A, but that might do so in combination of others. Gradual or evolutionary phasing out, discontinuing even abruptly several products within an ongoing business, shifting of production facilities or closing for other cost savings. These are the 4 answers. Sir, what are the key disclosures they also asked in the question? Study matter, the disclosures goes for some 2 pages, sorry, not 20 pages, 2 pages. We have put them in one small dabba here. Nature of description, period of discontinuation, amount of revenue attributable towards DCO, then cash flow, operating, investing and financing, cash DCO and non-DCO, all the key points, carrying amount of assets to be disposed of and liabilities to be settled on balance sheet date, all the key points I have given over here. So since you are showing the material, we will just go to AS26 also, which we just finished. Look at this. Research phase, development phase, accounting treatment. Research phase now I will recognize as an expense. Development phase now I will capitalize subject to the following. If the development is technically feasible, that only we saw over here in AS26, technically feasible. Keyword, we are connecting with our material. That's it. Even if you go to AS29, just to connect with the questions because we didn't take it over there. Okay. Provisions, we have to create liability. Contingent liability, disclose in notes to accounts. Contingent asset, accounting, recognize as an asset only upon receipt. Until receipt, you cannot recognize it. So contingent asset until receipt you can't recognize. So even estimate you should not show. 3.2, 3.5 should not show until receipt. Disclose in directors report. So until receipt, Only when it's received, you will show in FS. In director's report, we will show. Now, the question one student asked here is, in director's report, what amount I will show? Any amount can be shown. Any amount can be shown because accounting standards give guidance for preparing FS, which is P&L balance sheet cash flow. Accounting standards don't give guidance for preparing director's report. Okay, that's why here the answer they have told, since it's not received, you will not show in FS, we will show in director's report. That's the answer. Next, AS23. Okay, AS23, this question is there in study mat, not as an illustration. We study only illustrations and practical questions. This is there as an example. Okay, very easy question. If you know AS21, yet to learn AS23, it's fine. We can easily do this. A invested 1 lakh to acquire 10% stake investment in B Limited. 23 na it's associate, guys. So associate na you just have to compute what? 20% whatever, 10% in B Limited, and later again invested 3 lakh to acquire another 20%. That means first they had 10%, then they purchased 20%. Totally they purchased 30%. The net asset value of B Limited at the date of respective investment was first 10% vaangumbodhu the value is 7 lakh 50 and 12 lakh 50 when you purchased 20%. Are you following, guys? And they invested 1 lakh and 3 lakhs. They're asking you to find goodwill or capital reserve. Simple. Consolidation, what is goodwill? We will basically do what you paid versus what you got in our step 5 in consolidation. In other words, we will just do basically net investment minus net assets on date of acquisition. Correct? I should do this 2 times. For 10% once, for 20% once. For 10%, first I invested 1 lakh and you got how much, guys? 7 lakh 50. Correct? So first time I invested 1 lakh and net asset on date of acquisition is how much? 7 lakh 50,000 you got. But in that you got only 10%, which is how much? 75. For something worth 75,000 you paid 1 lakh. So your goodwill will be 25,000. Again repeat the process. Second time you purchased for 3 lakhs, but that time the value of the company is 12 lakh 50 for 20%. So 12 lakh 50,000 for 20%. Quickly compute without calci, guys. 2 lakh 50,000 is what you got, for which you paid 3 lakhs. So goodwill will be 50,000. 25 plus 50. Total goodwill is how much? 75,000 is the total goodwill. Are you following, guys? That only will be in the answer also. So if we go to the answer of question number 23, I will just cross check every time just for our satisfaction. Goodwill first case 25,000, second case 50, total 75. So basically goodwill computation you have to do it 2 times. And then you should also establish that this is an associate because it's more than 20%. Are you following, guys? Next, 22 I will do it sometime later. Beautiful question, guys. AS22 is a beautiful question. Beautiful sonna hari sirikranga. Okay, fine. Why this question is so good, I want you guys to try it out also. I will do it over here just for want of time because it's getting late here. We will do it. You will get videos together. First time ever a question has come in deferred tax asset and liability with rate change for 3 years. Always rate will be same. And I think somebody who said this has been watching my class, because in our class when we introduce AS22, I will always give one. I start off AS22 with one example. Even in marathon, that 100% depreciation comes for buying windmill. They would have purchased windmill and 100% depreciation came. That same question. So some examiner saw our class and he made this question. And the rate change is the new one. Beautiful question. Mark it as important. But why I am doing later? Because AS22 only came in September 24 exams for compulsory 5 marks. Repetition again may repeat, chances are less. Okay. So we will come back to this. I don't want to do all the new questions at once. Just now 23 is new, 29 is new. Let's do few other questions. AS20, oh again new question came. Fine, we will do it in some time. New question. Let's do 19. Some repetitive questions. AS19, lease. They have given some data. I have seen this dabba many times in many classes. Okay, fair value, lease term, all of that. Discount rates also they have given. Whenever they give discount rate, you will use those discount rates. Ascertain unearned finance income. What is unearned finance income? You have a formula. I will go to our notes and show you. Okay. Yeah, AS 19. If you see, we have gross investment in lease minus net investment in lease. So unearned finance income will be gross investment in lease minus present value of gross investment in lease. In the concept class, I will teach the logic of this formula and we will derive this formula itself. Here I am not going to do all of that. What is gross investment in lease? Basically, what is the maximum return possible? In logical words, what is the maximum return possible, which is nothing going to be lease rental plus GRV plus UGRV minus present value of lease rental plus GRV plus UGRV. All this will come. This only is gross investment in lease. Okay. So what is the gross in lease rental is how much, guys? Totally 4 lakhs into 5, 20 lakhs plus GRV is given at 0.8 plus UGRV is how much? If total RV is 1.5, then minus 0.8, you will get 0.7. So effectively plus 0.7, you will get 21 lakh 50,000. Are you following, guys? That's what we have over here. So if I go to AS 19, yeah, if I go to AS 19, 4 lakhs into 5 plus 80 plus 70,000, you will get 21 lakh 50,000. Then for the same values, 4 lakhs into 5 plus 80 and plus 70, you have to find present value. So the present value of this is 13 lakh 45,000. Therefore, 21 lakh 50 minus 13 lakh 45, 8 lakhs 4,148 is the unearned finance income. Are you getting it? The logic is basically the maximum return I can get in this is 21 lakh 50,000 without considering time value of money. With considering time value of money, present value is 13 lakh 45. So the interest for me, income is 8 lakh 4,148. Okay. Anybody watching this struggling with the concepts, you watch the concept video, you don't have to remember the formulas. I personally don't remember any of the formula. It's just application of logic. But considering exam is just 10-15 days away. You know how to do it. That is enough. Derivation and all after the exams. Okay. Next. Question number 18. Actually, if I see, question number 18 also is a new question. I should add it here as a new question, but not that difficult. So I didn't mark it separately. Nice question. Not beautiful question, but beauty. Okay. With transactions with a related party for service provided and received free of cost, should it be disclosed? AS 18 talks about disclosing related party transactions. Here they are saying there are related party transactions, but it happened at, should I disclose? Transaction is a transaction. Doesn't related party na, they will do for free only. Why should I make payment? Correct? Correct. So director's wife is coming to, let's say, some company. She will get it for free. Let's say director of Louis Vuitton. Director's wife is coming. I want this handbag. Pay 5 lakhs in Kepana. If I ask, then in the house you have trouble. So they're asking a limited company with corporate communication department which centralizes the public relations function for the whole group of A Limited and subsidiaries. No charges are however levied by them. So that's the basic core. Answer. Should I disclose? Yes. The answer is related party. Hence, it will constitute as a related party and will require disclosure even though if there is no price. A transfer of resource and obligation between related parties is important and not the price charged. Is there transfer of resource? Yes. And not the price charged. Are you following? Understanding, guys? This is AS 18. Next. AS 17. A company has an inter-segment transfer pricing policy of charging at cost less 5%. Segment reporting now from, let's say, from one segment, let's take ITC. ITC has bingo, chips department, and ITC has hotels. Now, when you go to ITC, book a room for 20,000 rupees per day, when you can afford that. When you go to that room for 20k, it's the most luxury stay in India. When you enter the room, they will give you free bingo chips. Free chips for paying 20k. Okay. Now bingo chips department transferred to hotel. Let's say bingo chips is costing 10 rupees. For others, they are charging plus 50% margin and 15 rupees you are buying the chips. But when bingo is sending to hotel, they are sending at less than 5%. They are sending at less than, they are sending at 9.5 only they are giving. Can bingo chips, one department, one segment, transfer to market at 20% above cost, market price? And within department, can it be 95% of cost? Yes. There wish you are required to examine policy of the company is correct or not. ITC, the company can decide any transfer pricing policy. We are no one to interfere in that. Yes. Okay. This RTP question, if you know, it's been there for ages. Last 10 RTP la 5 vaati idhaan keppan. Non-Tamil students, don't worry. I didn't say anything important. I said this came many times. Okay. Next. How will AS 16 is another new question. How will interest be capitalized when qualifying assets are funded by borrowing in the nature of bonds that are issued at discount? Again, a new question. I like this question. X Limited issued in 1 year a 3-year 10% per annum bond with a face value of 1 lakh at a price of 90,000 to finance a qualifying asset which is ready for intended to be used at the end of year 2. So what is happening here? Then compute the amount of borrowing cost to be capitalized if the company uses amortization of discount straight line basis. Recording students, if you need time to read question, pause and read. I will just brief the question here. What is basically happening? A company issued a bond of 1 lakh at a discount of 90,000. Only shares cannot be given at discount. Bond can be given at discount. So 1 lakh bond came at 90,000 rupees. Interest is how much they gave? 10%. That means interest will be paid at 90 or 10,000. 90 or 1 lakh? 1 lakh. So interest paid is how much? 10,000. Guys, if you're not understanding, in balance sheet, I issued bonds. Bonds are like debentures. I issued bonds for 1 lakh, but I collected from public only 90,000. So my entry will be bank account debit 90,000, discount on issue 10,000 to bonds 1 lakh. Are you following? Now, for all the 3 years, year 1, year 2, year 3, I'm going to incur interest. It's for 3 years. So, what is the interest for each year? 10,000, 10,000, 10,000. But construction is getting over at the end of year 2. How do you know, sir? You should have read the question. At the end of year 2, asset is ready for intended use at the end of year 2. That means this 10,000 and this 10,000 I will capitalize. This 10,000 I will of course debit to P&L as per AS 16. This is borrowing cost. If this was the question, I won't even be solving. I'm solving because it's a new question. Otherwise, I will show answer. But interest I have accounted. What about the discount? Discount, is it a borrowing cost? Is discount a borrowing cost? If you go to AS 16, we would have seen what is borrowing cost. Definition of borrowing cost we would have discussed in class also. Borrowing cost includes interest. I will keep always using interest, but it also includes commitment charges, amortization of premium or discounting charges, and amortization of ancillary costs related to borrowing. That means discount on issue of shares or debentures, that discount on issue also is part of your borrowing cost. So how much is the discount in this case? 10,000. This 10,000 rupees of discount I will transfer to P&L by passing the entry P&L account debit to discount on issue for how many years? 3 years I will transfer. I have to amortize this discount over 3 years. What is the discount? 10,000 divided by 3 means how much is coming for each year? 3333. So along with 10,000, there will be one more debit in my P&L in each of these 3 years. 3333. So first 2 years I will not capitalize 10,000. I will capitalize 10,000 plus 13,033 will be capitalized in year 1. 13,033 will be capitalized in year 2, and last year, year 3, this fully will be debited to my P&L as per AS 16. Are you following, guys? Nice question. Huh? Easy question, but let's check the answer. It should be correct because I'm solving a interest 10,000, 10 this, 10 this. They rounded off 334. Total borrowing cost. First 2 years I will capitalize. Last 1 year will be, since the last year will go off to P&L. Are you following, guys? Understood? Easy? Hello? All of you understanding, guys? Okay. Fine. We can go for one more question. I'm just taking a question which we can quickly finish now. Okay, last question for today. Recording students, nothing to worry. You will have part 1, part 2. No, I will merge both and upload as one video for you guys. Here I'm saying because we are closing over here with this question for today. AS7. Rose Constructions undertakes to construct a bridge for government of Uttar Pradesh. The construction commenced during the financial year ending 31st March and is likely to be completed by the next financial year. The contract is for a fixed period of 12 crores with an escalation clause. You are given the following information. So this is construction with escalation clause. This question is not there in the ICAA study mat, but this was there in the old syllabus study mat. Old syllabus MTP it was there. Now it's again back in RTP. So study mat old MTP, easy question. What they're saying, cost incurred up to 31st March is 4 crores. Cost estimated to complete the contract is 6 crores. That means current year in P&L, I will debit 4 crores. Escalation in cost was by 5%. Hence the contract price also is increased by 5%. You are required to ascertain the stage of completion, amount of revenue and profit. Those who know AS7 will know, sir, for AS7 I have to prepare construction ledger. This side I will create revenue, this side I will keep expense. Proportionate contract method. So first step in AS7 if you see is finding percentage of completion. Second step is applying this percentage on revenue and this will go to my P&L. Third year is accounting for actual cost. So if this is my P&L, first year is percentage of completion. How much work is done overall? Totally I'm going to spend 10 crores, out of which 4 crores is spent so far. Correct? So I will write 4 crores divided by 10, which is 40% of work is completed. Now you might say, okay, sir, escalation in cost was by 5%. My question is, this 4 and 6, what is given here, is already inclusive of 5%. Because the word is was past tense. So the first point is 40% is done. Second is percentage of revenue. Now the contract price is also increased by 12%. Sorry, 5% from 12 crores. So contract is fixed at 12 crores. So normally what I will do in all sums, I will do 12 crores into 40% of revenue. I will take it here. But this time I will not do it like that. This time why I will not do it like that? There is an increase. 12 plus 5%. How much is that? 12.60 crores. This into 40% is going to be my revenue. How much is that? 5.04 crores will be my revenue. 4 crores will be my expense. This is my revenue. So profit in this contract is going to be 1.04 crores. That's it. The sum is over. Sir, what are the key points here to remember? Students make mistakes. They will do 4 by 10, but they will ask question, sir, why should I not increase 5% even here? Why can't I make it 45%? No. Why can't I make it 4 plus 5% or 10 plus 5%? No. Here it's already accounted only is 4 by 10. Look at the wordings. Grammar was increased by 5%, but contract was also increased by, hence the contract was also increased by 5%. Then 12 is inclusive of this 5. No, sir. No. Question says it was fixed already for 12 with an escalation clause. That means 12 plus 5% will come now. Therefore, only in revenue I am adding 5% and taking 40%, which is 5.04. In expense, I'm taking straight away. You're getting profit of 1.04. Are you guys understanding? Okay. So we are done. Random questions we have finished. We still have some more questions left. All the RTP questions are only accounting standards. And then we will do MCQ also. So the first slot is done. Recording students, don't go for any video. Just keep watching. Immediately next part will start. Fine. Yeah. Thank you. Okay. Hi guys. We just finished AS7. Now instead of doing another sum, let's jump to MCQs just to keep our perspective intact so that you don't lose track if you're watching continuous 1.5 to 2 hours. Now, first MCQ, and there is only one MCQ in this RTP, which is from AS28. Fairly easy sum, but they bought AS28 and a little bit of AS10 in it. Very little bit, minute 5%. In AS28, the main concept, if they ask in exam also at inter level, is mainly going to be to compute your impairment loss. Your impairment loss is basically your carrying value, your book value compared with the recoverable amount. Recoverable amount is what you can recover from the asset. We don't call it NRV. What you can recover if you sell the asset. For that, recoverable amount is higher of net selling price and value in use. In detailed AS28 class, we talk about the logic of this equation. For now, for exam, loss is carrying amount compared with recoverable amount. If recoverable, for example, carrying amount 100, if recoverable amount is 70, then you will write off 30. Recoverable amount is higher of net selling price and value in use. That's it for our RTP. That's it for exam also. Come down here, they are given facts. Surya Limited has two fixed assets. Very good. FA1, FA2. The carrying value for both is FA1 600, FA2 is 300. So you can I merge both? No, both are separate assets. As of 31st March 2024, the value in use for FA1 is 500 and net selling price is 550. So I have to compare this with the higher of 500 or 550. Which is higher? 550. So I will take 550, but still there is an impairment loss because 600 the carrying value and the recoverable amount is 550. So for fixed asset 1 there is a loss of 50, which I will do as impairment loss. I will write off. Second, then as of 31st March 2024, I'm just going to second asset directly. Value in use for fixed asset 2 is 350 and the net selling price is 320. Whichever is higher. Which is higher? 350. Here there is no impairment loss for fixed asset 2 because book value of the asset is 300, but recoverable amount is much higher. Nothing to write off. There is no impairment loss. Another keyword or sentence I intentionally ignored is company did an upward revaluation last year for 20 lakhs for fixed asset 1. That means this 600 already includes 20, which is an upward revaluation during the year. Fine. What is the question? These are the facts. I have summarized this for you. Question 1. What is the total impairment for FA1 of current year? FA1 current year, we just computed impairment is 50. Search for option 50. 50 is available. Okay. Next, how much impairment loss will be charged to P&L for current year for FA1? This only is the most tricky MCQ. Not that tricky compared to other MCQs. What is the impairment loss? 50. Normally, what will be the entry? P&L account debit 50 to asset 50. However, the standard also tells a beautiful concept in accounting for impairment loss. For individual asset, it tells, see, individual asset charged to P&L if there is no revaluation surplus, or in other words, first if there is an impairment loss, first you have to debit the revaluation done if any for that asset. Then balance only will go to P&L. In this question, what is my impairment loss? 50. Already revaluation done is how much? 20. To the extent of 20, I will take to revaluation. Balance 30, I will debit what? P&L account. Are you guys following? That means, in this case, I will debit P&L only for 30 and I will debit revaluation reserve account debit for 20. What is the logic here, sir? Or asset ko already revaluation irukkumbodhu, how can I do impairment? First remove that revaluation, then go for impairment. Can I see 30 here? Yes. Adhe same options he gave, 150, 30 nil. Okay. Next, come to C. What is the total impairment for FA2? Just now we saw, no, for FA2 it is 0. Answer is nil. This either you will get 3 out of 3, or if each MCQ 2 marks now, 6 marks. No, sorry, 8 marks. We'll finish the fourth one now. Okay. What will be the carrying value of asset of FA1 on 1st April? That means after providing for impairment loss. Look at this. The asset was 600. Now I am providing impairment loss of how much? 50. Where I debit only is varying. 120 you are debiting revaluation reserve, other 30 you are debiting P&L, but the credit will be to fixed asset only. Two debits, 20, look at this. We debited 20, we debited 30, but credit is to the asset. That means 600 minus 50 becomes, remember, if you provide for impairment, the shortcut to remember is the new carrying value will always be recoverable value. Sir, I'm not able to understand. Logic, it's not logic, it's just one little bit of common sense. Carrying value was 100 in the first example, recoverable amount was 70. You are writing off 100 to 70. That means new carrying value will become recoverable amount. Therefore, here 600 minus 50, 550. Fourth one answer will be 550. What will be new carrying value? You can check the answer. That's about it. Fine. I'm confident about these answers. Okay. Second MCQ. Small MCQ, 1 mark MCQ. The debit or credit balance of foreign currency monetary item translation difference account. FCMTD account. Sir, I don't know what this account is, sir. Na padikve illa, sir. This comes in AS11. In AS11, we will discuss in our class, or wherever you studied, this will be there. Borrowings, then the difference will be taken into FCMTD account. Sir, what is this? For those who don't know, this account is basically whenever there is a forex loss, if the standard allows for a depreciable asset, you will add it to cost of asset in AS11, and that loss you will amortize as part of depreciation. Sir, and Purila sir, loss is 100. Instead of fully debiting to P&L, for certain cases when the long-term borrowing is for a purpose of an asset, I took borrowing for buying an asset, means that loss, instead of debiting P&L, that loss you will capitalize in balance sheet as part of cost of asset, and you will amortize along with depreciation. But sir, my asset is land, sir. It is non-depreciable. Then what to do? Then they are saying in other cases, if borrowing not used for depreciable asset now, then the exchange difference can be accumulated in FCMTD account. Instead of adding to balance sheet asset, I will keep it over here. Sir, then how to take it to P&L? That is in AS11. Here they are asking, this account will be in schedule 3, where it will be miscellaneous expense in balance sheet or no? And my schedule 3 illa. Will it be in other non-current assets or current assets? No, it is not an asset for me. So the only place I can keep it under is reserves. It will be shown under reserves as a negative item, which I will keep writing off every year. Are you following, guys? It will come in my reserves. See, detailed concepts, not an RTP, guys. You can go to our marathon or detailed class. Here I am trying to focus on the samku thavayana exam oriented discussion. If you have doubts, ask me. Let's go to AS1. This question is not new. It's been there for ages. Simple question. ABC was making a provision for non-moving inventories based on no issue for the last 12 months. Okay. The company wants to provide during the year 31st March based on technical evaluation. Simple. 100 lakhs was the value of inventory. Earlier they used to provide provision of 3.5 lakhs based on 12-month issue. Now they want to change to based on technical evaluation. That means instead of 3.5 lakhs, they want to give provision of 2.5. That means the closing stock in balance sheet or in your trading in P&L account, if it was 3.5, my closing stock would have been 96.5. But if it is 2.5, 100 minus 2.5, my closing stock will be 97.5. Can I make this change? Yes. Provision is an estimate. estimate na based on new information or new methods. I will keep changing. Technical evaluation sounds more better, so I will change. What is AS1 saying? If you change this method, it is okay. All you have to do is disclose. Is this material? Is this just 1 lakh difference? No. Is this material, guys? No. If it's not material, don't disclose it. If it's material, then you disclose the impact also. That is what they are saying here. Answer. The method of estimating this question, the method of estimating the amount of provision may be changed in a case. More prudent estimate can be made. You can change. In the given case, considering the total value of inventory, 100 lakhs, 1 crore, the change in the amount of provision from 3.5 lakhs to 2.5 lakhs is not material. So what is material depends on person to person. For example, 5,000 rupees, is it material for you, Sanjay? Material for you. Material for you. Material for me also. Now, 50 rupees, is it material for you? Today it is material, correct? 5 rupees is material for you, huh? No, you are saying no. But same thing, when you are in 7th standard, 5 rupees is material for you. So based, let's say you are earning 50 crores. Sir, I'm going to buy 5 BMW cars. That time 10,000 will not be material for you. Okay. So what is material changes based on time, person, all of that. The disclosure, still they're saying the disclosure can be made for such change in the following lines. Your own disclosure. Company has provided for non-moving inventories based on technical evaluation. Had the same method been followed, profit would have been lower by 1 lakh. Sir, how profit? You should just disclose. If it was 96.5 now, my gross profit will be less by 1 lakh. Because I changed the provision method, I am increasing gross profit by 1 lakh. So you have to disclose, hey, this year my profit increased. Not because I worked hard. Method mathita. This is what people do in real life. Profit controlling, the biggest element is stock. Provisions, they will play with that. That's why income tax disallow everything. Income tax doesn't allow all of this. Are you following, guys? This question has been there for so long. AS2 is not there in this RTP. Exam okay. AS3. Classification of operating, investing and financing and cash equivalents. If this comes in exam, just tell your Lucky Bhaskar part 2. Okay. Now simple. You know what's operating? Your core business. Financing now, borrowing or repaying. Investing, excess funds. Quickly, we will do it together. Proceeds from long-term borrowings. Taking loan. Where it will come? Financing. Recording also repeat with me. We will do it together. Proceeds from trade receivables. Operating. Core business. Trading commission received. Operating. Commission na something else. Trading commission na from the core business. Redemption of preference shares. Financing. Financing outflow. Okay, negative it will come. Proceeds from sale of investment. Investing, I sold investments, I got investment. Interim dividend paid on equity shares. Financing, interim dividend paid is financing. Interim dividend paid on equity shares is financing. Correct? Because equity shares issue is financing, that expense also is financing. Next three only are the interesting ones, which you don't have in study mat. Interest received on debentures held as investment. Investment. Logic. If there is something which is investing, any income on investment also will become an investing activity. Dividend received on shares held as investment, investing. Shares is an investment. Adilundu vara income also I will take as investment. Rent received on property held as investment, investment. Why all these are investment? Because of the wordings held as investment, held as investment, held as investment. Are you following, guys? When something is held as investment, adilundu vara any income will be taken as investment. Dividend paid on preference shares, financing. Marketable securities, cash and cash equivalents. What do you mean by this cash and cash equivalents? Cash and cash equivalents na cash nu irukunu avasam illa. Can I convert to cash like this? Now I have shares of ITC. Now the time today is, let's say, 8:30 p.m. now. Okay, but tomorrow morning I can sell this before 12 noon and get convert to cash. Can I convert to cash instantly, easily? Yes. Market la marketable securities, no, security in market has some demand. Are you following? Those who are watching recording, don't think, sir, yesterday you told 10 p.m. today 8. 2 days I'm splitting. Okay. Next, AS5. Easy question, but a new question added again. In starting I only told 4-5 questions. So this also is a new question, guys. Okay. But not that difficult, easy. AS5 talks about what, guys? Everybody knows AS5. net profit for the period, ordinary activities, extraordinary activities, prior period items, and exceptional items. Then change in accounting estimate, change in accounting policy. All separate concepts. In our marathon, in 1 hour, we would have finished this. Now come to AS5. During the course of last 3 years, a company owning and operating helicopters lost 4 helicopters. இப்போ என்னன்னு தெரியல, nowadays all movies helicopters coming. This Vete and Rajinikanth movie also helicopter one scene. Pushpa 2 also helicopter, he will buy and go in helicopter. So a company owning and operating helicopters lost 4 helicopters. The company's accountant felt that after the crash, the maintenance provision created in respect of the respective helicopter was no longer required and proposed to write it back to P&L as a prior period item. Discuss. Let me explain what is happening first. In the balance sheet, I have 4 helicopters, XXX some amount. It's an asset. Correct? Fine. Can you buy helicopter and fly by yourself inside city if you have the money? You need to get permission. Okay. Private jet, helicopter. There is a, sir, can I take private jet on rent? Yes. How you can book Ola cab? There is a separate app for booking private jet. From Chennai to Delhi, I want to go separately in a jet. You can pay 4 lakhs, 5 lakhs and you can go. Okay. That is coming. 10 lakhs or something. Okay. Now, for this asset, there is also a provision for maintenance. What do you mean by this? For this asset is a provision for maintenance now. Every asset will have a provision on the other side. For here they are creating for maintenance purpose. Meaning every year helicopter will have some expense. So I am saving every year some money. Let's say P&L account debit to provision 100. And here there is 100 as a provision. Helicopter could be, let's say, 10,000 rupees. Okay, every year I'm creating provision that tomorrow if there is an expense, I already debited before itself. So this entry I will reverse. Provision account debit 100, actual expense now I will credit what? Bank. Sir, I'm not able to understand. Simple. You yourself will always keep some savings for something. If let's say you have a bike, we don't know when expense will come. Some 5,000 rupees you will keep it ready if at all something happens. So like that for helicopter they kept some provision. Now the question is, this helicopter got destroyed and value became 0. If helicopter is not there, do you need the provision for that? No. So they are reversing the provision for which they passed entry provision to P&L 100 and they are calling this as a prior period item. Can I call it a prior period item? No. What is prior period item as per definition? You all know. Prior period items are income or expense. Here it is income. Helicopter reversal income which arise in the current period as a result of error or omission in preparation of FS in previous year. Is this error or omission? It's accident that happened in this year. Therefore, the answer for this is yes, you can reverse provision to P&L and write the amount, whatever comes, but don't call it a prior period item. You can call it an extraordinary event. Because extraordinary item will not happen every year. You think 4 helicopters crashing for a company is once in lifetime. So it's an extraordinary item, income on the credit side. That's it. Are you following? That's what the standard also says. 5th one, it says it will not be considered as prior period item, but it shall be considered as an extraordinary item. That's it. Are you following, guys? AS5. Then 7 we did. Why AS6 is not there? Anyone? Sir, இப்போலாம் தேவையான கொஸ்டினா சார் எக்ஸாமுக்கு. Why 6 is never there in syllabus? AS6 only was depreciation, removed and added, not replaced. It's removed and added as part of AS10. So up to 2016 we had AS6 and AS10. Then both were merged into one standard. Examiner they will not ask, guys. Articleship, that is also important. Okay, fine. AS9 new question. We will come to this. Yeah. And then 10 also is not a new question, that is there in study mat practical. 9 is again a new question, good one. Okay, what they have done, they have merged the AS9 along with AS19. In 19 there's a concept called sale and lease back. That provisions they have brought into AS9. Beautiful integration of two standards. Okay, Follow. Mithya entered into an agreement with Satya, okay, for sale of goods costing 8 lakhs at a profit of 20%. The sale took place on 1st Feb. So let me summarize. I'm only new sums I'm doing in detail, guys. Okay. So on 1st Feb, which year? 2024. M sold to S. Mityavo Satyavo. M sold to S. Goods costing 8 lakhs at a profit of 20%. That means 8 lakhs plus 20%. How much you will get? Without calci, come on guys, don't use calculator. 8 lakhs and 10% is 80,000. 1 lakh 60. So selling price will become 9 lakh 60. So on this day, what entry will M pass? Bank account debit to sales 9 lakh 60. If question ends here, I will stop here itself. This I am showing you what will happen if I read the question till here and go to next question. Then on the same day, sale pannanale, Satya Limited entered into another agreement with Mithya. So Satya is again entering into an agreement with Mithya on the same day to resell the same goods at 10.8 lakhs on 1st August. Oh, so what is happening here? This day itself, they entered into an agreement. They shook hands and they told on 1st August 24. Exactly after how many months? 6 months. They told this fellow, Satya told, I will buy it back again. So this entry will reverse basically. It is like a sales return. So sales account debit to. Okay, he will buy it back, correct? Satya an agreement to resell the same goods at 10. Yeah. So he will buy it back. To resell the same goods, now I have to buy it again, guys. Sales to bank for 10 lakh. 80,000. So instead of sales account debit, let me write purchase of asset. So what is happening for M? First, can I say in the 6 months, M has done a transaction like this. If I take M out of books, okay, in the month of Feb, he is writing a sale of. In the month of August, he is writing a purchase of 10 lakh 80,000. This is not sale. This is planned sale to arrange for finance. In AS 19, we have seen a concept called sale and leaseback. Why are M and S doing this? They are good friends. Maybe now M needs money, so he's selling for 9 lakh 60. Later, he's repaying the money as 10 lakh 80. Sir, the loan away katlame, sir. What should have been done? They should have shown loan as 9 lakh 60 and repaid how much? 10 lakh 80. But if I show in loan, it comes only in balance sheet and not in P&L. So look how smartly they planned. Are you understanding, guys? See, M basically wanted money. So he took a loan of how much? 9 lakh 60 and later he's repaying to S 10 lakh 80. This is called sale and lease back in AS 19. Here is sale and buyback here. So instead of giving a taking a loan of 9 lakh 60 and repaying 10 lakh 80, this M smartly what they did. They showed sales of 9 lakh 60. Book will go up and they are showing later purchase of 10 lakh 80 next financial year. This is Feb, this financial year. This is next financial year. So I can't allow this accounting. This is not fair. Now, how do you know this is happening here? This happened here because question told. In real life, how you will find this? This is happening in one financial year. This is happening in next financial year. This year, different article will go for audit. Next year, different article will go for audit. Company can escape. Many companies do this. Teaming and leading, they'll do this. So as an article, you have to connect two transactions. Adhe al thiripi varane, are goods going out. All this you will do in audit. Now come to accounts. Fine. That means you tell me, guys, finally, can I show this 9 lakh 60 as sales? No. Can I show this as purchase? No. I have to treat this like a loan. So what is the amount of interest actually? 10 lakh 80,000 is repaid and I borrowed how much? 9 lakh 60. Interest is how much? 1 lakh 20,000 was the excess you paid, which is interest. Divided by how many months? 6 months. So per month interest is 20,000. So what I will do, Feb, March, previous financial year, April, May, June, July. So what I will do, I will not treat as sales. I will show this like a loan only. And for this year, I will debit my P&L to the extent of 40,000, 20,000, 20,000. Are you following? Next year, I will debit my P&L each month to the extent of 20,000. I will debit for 80,000 as an interest expense. And this entry, I will not show as bank to sales. This is not sales. I will show this as an advance. I took advance. While repaying also, I will not show as purchase. I will again show as advance. Loans and advance. I took advance, I repaid advance. So what is the final accounting? I took advance of 9 lakh 60. I repaid advance next year of 10 lakh 80,000, and the difference interest is amortized over the next 6 months. 40,000 this financial year, 80,000 next financial year. Are you following, guys? Understood? Guys, we'll check the answer in study matter. So look at this. Question 7. Also, the reselling is predetermined and covers the purchasing and holding cost of Satya. Hence, the transaction between M&S on 1st Feb should be accounted as financing, as a loan, and not as a sale. Let me finish this. Therefore, look at the entry. Bank account debit. We also pass the same entry. Bank account to advance we put. So here also they are showing bank account debit to advance from Satya 9 lakh 60. While I am repaying also, next year I will repay. But I am passing entry only for 31st March. So next year when you are repaying, entry will be advance from Satya to bank 10 lakh 80,000. But they are asking only for this year. Therefore, finance charge, interest. But schedule 3 says finance charge. So finance charge to Satya 40,000. P&L to finance charge 40,000. How this 40,000 came? We just computed here. How much? 40,000. 2020. They have passed together over here, 40 and 40. Are you understanding, guys? Good question. Hello? Clear? Yes, doubt. Otherwise, it will be a sale. Okay. His doubt is, so two doubts I can take from that. One is, because it is, where is the word predetermined? On the same day, Satya entered another agreement to resell the same goods. Online students, everybody here, the doubt here from Sanjeev is that, sir, because it is predetermined, you are doing like this. If it is not predetermined, we will not do it like this. We will show as a separate sale, separate purchase. Scam dana, sir, scam na. If somebody wants to do scam na, they will do scam. Second, his question is, sir, if they entered, they will repurchase, but what if the transaction never took place? He never repaid 10 lakh 80. Something else will happen. Or, see, how can he not repay? Then you should take it as a genuine transaction. They planned for it, but it got cancelled. That means, are you trying to say this 9 lakh 60 is actual sale? So your doubt is, first they planned for rebuying. Now they did not plan. The plan was cancelled. So his doubt is, sir, first they wanted to do scam, sir. So they did that for 2 months. Debited P&L, debit 40,000. Next year, April, new year, they thought, no need scam. We will be genuine people. So we will not do this reversal. This 40 will be reversed again next year because it is not an interest. That's it. It will be reversed in the next year. But April full. They will not do. Scam pandra, scam pandina. Okay. Are you getting it, guys? Online students, I'm just repeating the doubt for your purpose. Two doubts was, what if it was not predetermined? Take as normal sale. What if it was predetermined and they cancel the plan afterwards? Then reverse that 40,000. Are you following, guys? See, when you mug up, you can easily solve those questions. But only when you learn with concept, we are connecting AS9 and the concept of AS19 is coming here. So we need to learn everything. Gone are the days where, sir, I will skip 1-2 topics. Okay, 1-2 topics is fine, but you cannot skip significant part of syllabus. Okay. I understand because of time, 1 2 standards, okay, 1 2 chapters is fine, but try our best, and concepts is very important, okay. You can see RTP is a classic example, okay. Next, MS has acquired, this is not a new question, this is the new question for new ICA study mat. It is there in the practical questions yet to be tested. My feeling this will come in exam very soon. AS10. MS has acquired a heavy machinery at a cost of 1 crore with no breakdown of the component parts. The estimated useful life is 10 years. At the end of the 6th year, one of the major components, the turbine, requires replacement. Turbine wants replacement. As further maintenance is uneconomical, the cost of new turbine is 45 lakhs, discount rate is 5%. Can the cost of new turbine be recognized as an asset? If so, what treatment should be made? Okay. This is basically component method of accounting in AS10. Beautiful concept again in AS10, guys. இங்க என்ன சொல்றான், MS has acquired a heavy machinery at a cost of 1 crore with no breakdown of the component parts. Let me give you context. Let me teach this from scratch itself. Not full speed, sorry, full slowly, but medium speed. See, if there is an asset for 100, I am telling the asset has two parts, 30, 70. I am replacing this 30. Okay, not now, after 2 years. So, after 2 years, what will happen if I depreciate 30 and 70? Let's say 2 years I depreciated 6, 10%. 2 years I depreciated 14. Now the asset will become 24, 56. Correct? Are you following? I'm giving a random example, then we'll go to the sum. So asset is 100, two parts, 70 and 30 and 70. Now this 30 I am replacing with a new asset of 40. I'm buying new. This part is not good. Let's say this is the car. Let's say this is the tire. I want to replace the tire. So I purchase new tire and threw the old tire. So this should be reduced. 24 should be reduced and added by what? 40. So what will happen for the entry? I will write asset account debit 40 to asset account 24, or I will do it separately. To bank, because I purchased for 40, and then I will write off this 24. So I will write P&L account debit 24 to asset 24. So effectively what will happen to asset? From 30 minus 6, 24 will go away and replace with 40. That means old asset is removed, new asset is added. What is the full book value now? 40 plus 56, which is 96. Are you following, guys? This is only called derecognition of an asset in AS10. Now in this question, what is asking? The problem is this 1 crore asset breakup is not given. No component parts. So what is happening? 1 crore worth of asset is there. Okay. This asset, one component of that, which is turbine, no? Yeah, turbine. Turbine. New turbine. This turbine, how much it is? See, heavy machinery with no of component. Turbine part, I don't know. When this replacement is happening at the end of 6th year, that means what I will do, first for this 1 crore, let me provide depreciation for 6 years. What rate they are doing here? 10 years, straight line method. So into 6 by 10, how much? 60 lakhs I will reduce as a depreciation. My remaining asset now is 40 lakhs at the end of 6th year. Now only I am buying a new turbine and this I am replacing. Now the problem is there is one turbine here and the remaining part is others. Like how that previous case came, 100 was there, sir. Here there is 24. Here there was 56 in the example I created. So here I am replacing now plus 40 minus 24. Add these both 96 over. Simple, guys. But here I don't know how much is turbine. I don't know how much is others. But in question they gave a clue. If the cost of new turbine is 45 lakhs, okay, and the discount rate is 5%. So I will do an assumption that if I purchase the turbine for 45 lakhs in year 0, what will be the value now? The present value of the asset if I purchased. If I knew the breakup in this 1 crore, if turbine is 45 lakhs, balance will be 55 lakhs. So I cannot reduce 45. I need to find the present value of 45. What is the value of the turbine today? So I will just apply the formula they gave. 45 lakhs into what is the discount rate? Into 5%. 1 divided by 1.05 to the power 6. How much you're getting, guys? Quickly, I don't have calci with me today, unfortunately. It's there here. Yes. So 1 divided by 1.05. 1, 2, 3. Not working properly. Takkan solunga. 1 divided by 1 point. How much? Sorry? 30,57,969. Okay, super. So what is happening here? Quickly, guys. In the asset which is 1 crore, I already reduced 60 lakhs. I'm left with how much, guys? 40 lakhs. This 40 lakhs, let me just cross check if the answer is correct so we should not make mistake later. How much you got? 33,57,900. Correct, guys? Okay. 33,57,900. We'll round off. Okay. So, what they are saying, in this 40 lakhs, the turbine is costing 33,57,900. Not the new turbine. See, 1 crore corresponding turbine is 45 lakhs. But after 6 years, this value is how much? 33,57,900. I must, sir, idhukku na direct away 45 lakhs I can divide by 6 and depreciate. No, sir. No. I can do that if no other information is available. But here they have clearly given the discounting rate for 6 years. So what I would have purchased for 45 lakhs in year 0, in year 6 end, it will be 33,57,900. Therefore, what is the remaining part of asset? 40 lakh minus 33,57,900. How much are you getting? 40 lakhs minus 33.579. How much? 6,42,100 is the remaining asset. That I will not disturb. Now I purchase new turbine. So I will reduce 33,57,900 from my asset and I will add how much? 45 lakhs as new turbine. What is the net addition? 11 lakhs 42,100 is the net addition. Let me check that. Okay, yeah. So I'm adding 45 lakhs. This side it will be 6,42,100. But now what has additionally been done also? Cost of turbine before 6 years is 33,57,900. Okay, yeah. 33,57,900. This is which value? At year 0. Okay, here we are doing one small change. One small change, guys. Let me just correct that part. Apologies. Now, here what assumption is taken is 45 lakhs is the cost of turbine at year 6. Ipo vaangna it is 45 lakhs. But what about at year 0? 6 years back if you purchased, you would have got 33,57,000. So this would have been the value at year 0, time value of money. Now you have to depreciate for 6 years. So this into 6 by 10. How much you are getting? 20,14,740. That's what they reduced. 20,14,740. Therefore, what is the value of asset now? 13,43,160 is the value of asset now. This asset only will be removed and replaced with new turbine of 45 lakhs. What is the net value of these two? 45 lakhs minus 13 lakhs 43,160. 31,56,840 is what we should be having here. Yeah, in the net pananga. 13,43,160 minus 45 and this, yeah. Add which one? Yeah, add this. 40 lakhs, you will get how much, guys? 71 lakh 56,840. That's what we have here. This is the other computation. Leave this. You will have 71 lakhs 56,840. Since we got confused in the middle, let me just summarize this for everybody's benefit with our notes itself. Yes. Correct. Not from here. From the 1 crore you will split. Let me solve from here itself. Okay. Total cost of machine is 1 crore. In that depreciation is 60 lakhs. Therefore, today the value of asset is 40 lakhs. Okay. This is the value of asset today. Now, what I should do, in this 40 lakhs, I don't know what is the breakup of each. But I know turbine is part of this. Turbine is included in this. No, it's correct only. 40 lakhs from 40 only, 100%. So, from 40 lakhs, there is turbine, there is others. I want to know how, that's what they're doing here. From 40 lakhs only, they are reducing this, and then they're adding this, and again they're adding back how much? Yeah, 40 lakhs. So it's basically from here. From 40, they are reducing the current. This is the cost of turbine. Turbine reduce panni, thirpi new turbine add pandran. Are you following, guys? So what he has done, basically I will write like this. 40 lakhs is including turbine. From this I have to reduce old turbine and I have to add new turbine. So you will end up with the answer of 71,56,840. 71 lakh 56,840. New turbine is how much? 45 lakhs. So a part of this 40 lakhs only is old turbine. How much is that only? We found here as 13 lakh 43 160. So I reduced 13 lakh 43 160. So you added 45, you got this. Understood? Now I'll summarize this over here once, just for the confusion to avoid for you guys and online. If you confirm you understood, they will also understand. It's okay, extra 10 minutes, not a big deal. 40 lakhs is the value of asset including turbine. Now turbine I should remove. So I have to remove the old turbine and add the new turbine. New turbine added for 45. But what is the value of old turbine I should remove? Then only the remaining, this 40 minus 13, some 26, something is coming. No, that only is other asset. How do I know the value of turbine? Further, I am doing a different calculation where I am assuming this 45 lakhs turbine at year 6. If you purchased in year 0, 6 years back, that time the cost would have been 33 lakh 57,900. This would have been the new asset at year 0. Therefore, now depreciate for 6 years. You will get 13 lakh 43 160 is the value of turbine, which is part of this 40 lakhs. Are you getting it? For a very long time, we've been saying component asset is very important. In old syllabus also, I used to say that, but no question came in exam. New syllabus started asking these questions. So be ready. This question all comes in exam na easily 4 to 5 marks worth in compulsory. So far never tested in any of the exams. Are you following, guys? Clear? The 4 of you, I know we did little confusion, but that's okay. See, it's not like I know the answer, sir. This is the answer. I am solving it with you guys. So small mistakes here and there are normal. Have you 4 understood? Okay. Online, those who are watching, if you understood this, put a thumbs up and comments. Yes, sir. AS10 clear. In Jan 25, we will get 5 marks in AS10. Okay. Next. AS11. Next question. We still have only AS11, AS14 and AS22. That's it. We'll be done with RTP. In that, AS14 Daba question, AS11 Daba question. Let's finish both the Daba questions first. Repeated questions. And then lastly, those who are waiting to watch this video only for the new questions, adnala 22 last vechirken. Okay, so you fast forward fully. I will get some views also. Okay, AS11, just joking, guys. Bansal company was imported new raw material worth 12,000 on 15th Jan. So let me prepare a timeline here. Okay, hinge mudichiren. 15th Jan they purchased for 12,000 when the dollar rate was 68. Later, the payment was made on 5th of May when dollar rate was 64. And 31st March, the dollar rate was 65. How should I do the accounting before I read the question for this? AS 11 teaches us accounting. It says, first when you make the purchase, account for that rate. What is that? So, yet to pay, correct? So, purchase account debit to supplier imported from whom? Benzela, hinge irukku. Bansal company imported from whom they have not given, correct? Vendor. So, to liability vendor, I will write how much? 12,000 into 68. How much? 8 lakh? 16,000. Correct? Later, when you are making the payment, you are paying for 84, 64. You are saving. But 31st March, will I do any entry? Yes. You have to restate your liability with the exchange rate as of 31st March. Sir, where is this given? This is given in AS 11 in a very simple way. AS 11 says, recognize every transaction on date of transaction using exchange rate on date of that transaction. On balance sheet date, again you have to measure using the closing rate. So here I will measure using 68 in our transaction. Here I will restate for 65. On settlement date, again measure using 64. Whatever difference or gain you get, take it to your P&L. Clear? So here what I will do, on 31st March I have to restate. So how much I am saving, guys? 3 rupees per dollar I am saving. 3 into 12,000 is how much? 36,000 rupees I have saved. That means, in other words, now if I have to pay, I just have to pay 12,000 into 65, which is how much, guys? 12,000 times 65, fast. 7 lakh 80,000. 7 lakh 80,000 is the new amount. But I am paying 12,000 into 65 is how much? Yeah, 7 lakh 80. Earlier I recognized liability for 8 lakh 16. Now I should pay only 7 lakh 80. Therefore I am saving how much? 36,000. I don't have to do whole amount. I can just do 3 rupees saved into 12,000, which is 36. So my liability is not 8 lakh 16 anymore. My liability is only 7 lakh 80. So I will pass the reversal entry, liability account debit to P&L 36,000. Are you guys following? Sir, first I created liability for 8 lakh 16. Now my liability has reduced to 7 lakh 80. So I will reverse the liability to the extent of 36,000. Again, on settlement day on 5th May, again it reduced by 1 rupee. Again, how much I am saving? 1 rupee per dollar into how many dollars? 12,000. So 12,000 into 1 is 12,000 rupees I am saving. That means I will actually end up paying only 7 lakh 68,000. How that came? 12,000 into 64. So again I have to reverse liability by passing liability to P&L. How much, guys? 12,000. So overall savings for me is 48,000. So look at this. First I created for 8 lakh 16,000. Then after it became 65, the value became 7 lakh 80. Therefore you are saving 36,000, which is reversal, which will be shown as an exchange gain. This is previous year. In the next year, in subsequent year, settlement date, company would again recognize the gain of rupees 1 per dollar. Again, gain is 12,000. So 36 plus 12,000, the gain is totally 48,000. This is what we have to do. Sir, now question A full padikala, sir. What is the question first of all? This is what we have to do, correct? The accountant of the company, what he did, passed an entry on 31st March, adjusting the cost of raw material consumed for the difference between 64 and 68. Is this correct? No, balance sheet date you should only take 65. How does he know about 64 which is happening later? Or if he knows also, he's adjusting now. No. Balance sheet date should be 65, then only 64, and that too he adjusted cost of raw material. That means the gain, instead of taking to credit of P&L, he reduced from purchase price. Not allowed. What you purchased you show separately, gain you show separately. Do not set off. Accountant, sorry, that's why you're still accountant and not CA. Okay, fine. Understood, guys? All of you understood this question? Yes, doubt? No, his doubt is the balance 36,000 will I show 36,000 will I show in foreign exchange gain or P&L. The entry will be like this. The entry will be liability, which I am reversing, correct? Liability account debit 36,000 to foreign exchange gain 36,000, and later I will write foreign exchange gain account debit 36,000 to P&L 36,000. Yeah, you have to show both the entries. I did directly liability to P&L because we're in marathon class of RTP. Okay, done. Feel free to ask your doubts. Last two questions, AS 14, AS 22. AS 14, this question is about computing purchase consideration. We know amalgamation is of three parts: computation of PC, accounting in the books of buying company, accounting in books of selling company. I don't know why students get confused in PC computation. The simple hack is PC is what is paid to the shareholders of selling company and nothing else. Sometimes they will tell I paid debentures. Simple. Let's say you went to buy a house. You went to one house in Chennai, Nungambakam. You bought the house, you paid money to the house owner. But security is there down. They told, I only gave the contact. No, give some money to me. Okay, fine. I don't want to cheat the security. How much he's saying? Sir, small, sir. 10,000 rupees you give because I only connected you and I spoke for a deal. I told you're a good person. I know you're not good. So security, okay, pesa. Here, take 20,000 rupees. So I gave him 20k to enable me to buy that house. Can I include that in PC? No. So PC is what is paid to the owners of the company. Owners are shareholders, equity and preference. Other base study this question. Asta Limited is absorbed by Nishta. So Nishta is the purchasing company. Asta is the selling company. Or in other words, Nishta is the transferee company. Asta is the transferor company. The one Asta is transferring itself to Nishta. Okay. The consideration being the takeover of liabilities, the payment of cost of absorption not exceeding 10,000. Actual cost is 9,000. The payment of 9% debentures of 50 at a premium of 20% through 8% debentures issued at a premium of 25% of face value. Okay, fine. And the payment of rupees 15 per share in cash and allotment of 3 preference shares and 4 equity shares at a premium of 20% for every 5 shares in Asta. Fairly simple sum. Do I consider the liability payment? Liabilities? No. Will I consider debentures? No. So that part of question I will not read itself. For me, what I paid to the shareholders only is part of PC. Rest will come in amalgamation adjustments. So here, yeah, from here and the question. First part, no, I don't care. Okay. The payment of rupees 15 per share in cash. For whose shares? Asta. The number of shares of vendor company is 1,50,000. So first this 1,50,000 into 50 now. So let me go check that. 1,50,000 into 15, 22,50,000. Correct? Okay. That's it. In the first part, no, don't even read that. Ignore it for this sum. Okay. The payment of rupees 15 per share in cash. Done. Next, the allotment of 3 11% preference shares of 10 and 4 equity shares for every 5 shares. That means for preference shares, the ratio is 3:5, and equity shares, the ratio is 4:5. But how many preference shares are there in the company? Assuming it is same, 1 lakh 50. So preference shares will be for every one share 1 lakh 50 into 3 by 5, and each share is given at how much, guys? 10 rupees. So into 10, how much is coming? How much? 9 lakhs. Let me go check that. Are you getting 9 lakhs? I'm assuming both preference and equity is 1 lakh. Assuming a kuduthirukano. The number of shares of vendor are 10 lakh each fully paid up. Question wrong. I say a question. What is this? It should be 1 lakh of 10 each. So assuming it's both preference also 1 lakh 50, equity also 1 lakh 50, or in other words, I won't say a question wrong. I will tell for each 1 lakh 50, I'm giving preference and equity. Then question is correct. So what I'm saying, for the 1 lakh 50,000 shares, I'm giving preference plus equity. Question is correct only. So for 1 lakh 50,000 preference, I'm giving into 3 by 5 into 10, which is 9 lakhs. And for equity, what they are saying, 4 for every 5 at a premium of 20%. So here how I'll write that, 1 lakh 50,000 shares of vendor into 4 by 5 into premium of 20%. Now face value 10. So into 12. How much you're getting? 14 lakh 40,000. So equity shares worth 14 lakh 40. Preference worth 9 lakhs. Let me go check. 14 lakh 40, 9 lakhs, 20 lakh 50, 45 lakh 90,000 total PC. There have been days where they used to ask in compulsory question, compute PC. Okay. If you are lucky, that will come. But if that comes in compulsory, na amalgamation agum. Okay. Fine. Understood, guys. Question 10. RTP it came, so we discussed it. 16, everything is over now. Yeah, 20 and 22 is there. Sorry. To EPS. So both new questions we have kept for the last AS 20 and AS 22. New, absolutely new question. Not there anywhere in CA Interbook. It is not there in CA Final also. In Final book also I have taken the standard. It's not there. Okay, fine. XYZ has a wholly owned subsidiary BC. The group prepares consolidated financial statements for the year ended 31st March 2024. XYZ in its separate financial statements has incurred a loss of 2 crores, but while the consolidated profit of the group is 40. So XYZ, two things are there. Separately they have loss of 2 crores, and group level when you consolidate they have a profit of 40 lakhs. They are mixing consolidation with EPS. First time in CA exams history. XYZ has 5 lakh shares outstanding as of 31st March 2024. Very easy question. Further, it has granted options on the date, and in respect of such options, 1 lakh shares are considered to be the shares issued for no consideration. That means denominator I will take 1 lakh shares. There are no changes in income or expense that are expected from issue of equity shares on options. Therefore, numerator no change. Denominator will be 1000. Compute basic and diluted EPS for separate and group. That means I need 4 EPS. What are the 4 EPS I will need? For separate and for group, basic EPS, diluted EPS. Basic EPS la we know denominator is going to be only 5 lakhs because there is no options coming here. For diluted EPS, I know here I will take the full 1 lakh because the logic of options is, I believe that because of options only denominator will increase and numerator will not increase. That's why we take options as it is, and that's why he gave a clarification also. No change in income. If because of options income is going to increase, then you have to change the numerator also. Here there is no change of income, so here 6 lakhs will be denominator, 6 lakhs will be denominator, which is nothing but 5 plus 1, 5 plus 1. I'm again repeating. In the question, if they tell because of options income is increasing by 10,000, then you have to increase 10,000 in numerator also. We don't have a question like that in inter at least. Okay. Have you understood the 4 plots of denominator, guys? Now I have to write the income. Separate loss income is 2 crores in loss. Income will continue same over here because there is no change in income. If change is there, then it will come here. Because there is no change, only denominator is changing. Same way for group. 40 lakhs is the income. Here also 40 lakhs is the income. Can you find out the EPS in each case? First, how much you're getting? 40 in bracket. Here, how much you're getting in second? 33.33. Can I show EPS in negative? Yes. EPS is earnings per share. Earnings includes loss. So loss per share is 40 and 33. Here, how much is coming? 6 rupees 8. Here, 6.67. Let me go check before I even conclude. I don't know if it's correct. Just to cross check once. Are we getting the same thing? 8 and 6.67. 40 and 40. I will tell you why. Perfect. You have understood so far. Okay. Let me finish off the group. Okay. Group 1, the basic EPS is how much, guys? 8 rupees per share. It became 6.67. Diluted EPS means what? EPS is supposed to reduce. Why are we see EPS? If at all 8 becomes, instead of 6.67, 17 rupees, you should not disclose. Why? What is the meaning of diluted EPS case? Diluted EPS na EPS is going to reduce. So prudence concept we will disclose. But if EPS is going to increase from 8 to 17, it is not diluting. It is anti-dilutive in nature. Anti-dilutive now, it is increasing. Prudence concept says don't tell the shareholders about increase. So whenever, remember, if diluted EPS is going to be more than basic EPS, you should not disclose diluted EPS. Anti-dilutive. So here 8 became 6.67. We can disclose because it reduced. But come to separate FS. Because of loss, negative 40 has become negative 33, which is higher, which is larger in number. Negative 40 is a bigger number. See, if negative 40 is becoming negative 33.33, that means there is a gain of 6.77. Correct? I told you diluted EPS cannot increase, which is a more positive number, 33.33. That means if negative 40 became negative 50, okay, dilution is there, loss increased. But if negative 40 became negative 33.33, you are telling the shareholders that there is hope in the future. What if it's not there? So don't give hope for somebody when you're not very sure. So he's saying when negative 40 cannot become negative 33.33. So don't disclose 33.33. Diluted also show as negative 40 only. That's what they're showing here. Both places negative 40. And here they're saying 33.33. The diluted loss per share would have been reduced. As this is anti-dilutive, the options would not be treated as potential dilutive equity shares. Therefore, the separate FS, the diluted EPS would be same as basic EPS. New question. Are you following, guys? We have one question in what to say, study material, AS20 in combination with AS24. There is one question like this. AS20 and AS24. EPS with discontinued operation. Now you have a question AS20 with AS21. Sorry, with AS21. AS20 தனியா கேட்டாலே ஒரு அது ஒன்று. இப்போ he is asking combination. Be ready with both of this, consolidation and this. Correct. Consolidation consolidate பண்ணிட்டாங்க. ஆமா. Okay. Fine. That's it. This is done. Now we have the last question, which is AS22. With that, we'll be done with the RTP. Clear, guys? So far, all of you clear? Okay. Hi, guys. Let's do the last sum in RTP AS22. I've kept this for the last in our RTP discussion because it's little complex in terms of the adjustments. Okay. Those who are watching only this AS22, if you want, you can go watch the full RTP separately. I'm going to teach this sum. Even for those studying AS22 first time will understand. 20 minutes we will finish. ABC Limited prepares its accounts annually Okay, on 31st March, on 1st April 2022. So we have 3 years. 2022 is first year, 23 is second year, 24 is third year. It purchases machine at a cost of 1 lakh 50. The machine has a useful life of 3 years. That's why I told 22, 23, 24. And scrap value of 0. That means straight line method, if I depreciate, how you will depreciate? 1 lakh 50 divided by 3, it will be 50,000 in each of these years. Although it is eligible for a 100% first year depreciation in taxation purpose. So income tax left, first year you get 100% depreciation. That's why the difference even comes. The straight line method is considered appropriate for accounting purpose. So accounting purpose la depreciation is 50,000 rupees per year for 3 years, but income tax la it is 1,50,000, 100% in the first year itself. That means second year, third year, no depreciation is allowed. They have profit before depreciation 2 lakhs each year. Again one assumption. How can profit be same every year? For question 2 lakhs each year, and tax rate is 40%. Exactly similar type of sum in our marathon or AS22 detailed class also. We would have started with something like this. That time it used to be illustration for us in class. Now it's become exam question. The purchase of machine at a cost of 1 lakh 50 in 22 gives rise to a tax saving of 60,000. Okay. How, sir? 60,000? Even if they don't give this, I will show you how that comes. The corporate tax rate has been assumed to be same in each of the 3 years. Calculate deferred tax and past journals. Deferred tax liability asset. We have to find out. Okay. Then second case, what will be the deferred tax if the rate is changing from 40 to 35, 35 to 38? Beautiful question. Okay, I will come to second part later. That is the new part. But first part, let me finish. What I have done, guys, recording students, just to same time of the video, I have solved the sum for you and I'll explain this from here. Okay. So what I have done in books of accounts, books of accounts as per section 128, 129 of Companies Act, I am preparing statement for all the 3 years. So what I have done, earnings before depreciation and tax, 2 lakhs in all the 3 years given. Less depreciation, we just computed 50k for each year given, we computed, divided. Profit before tax 1 lakh 50, 1 lakh 50, 1 lakh 50 given. Less tax at 40%. 40% of 1 lakh 50 will be 60,000 without calci. 60,000, 60,000. Correct? This is the tax we will reduce. But this is not the actual tax. Enna sir solringa? The actual tax to be reduced is only 20,000 in first year and 80 in subsequent years. Sir, what do you mean by this? How did this come? Look at this. You learned, understood till here, all of you. I am saying this cannot be the tax reduction. So I am preparing a working note just to compute tax. PGBP as per income tax. So for this standard, you need to have basic knowledge of PGBP, guys. So what I am doing, profit before tax as per books of accounts is 1 lakh 50, 1 lakh 50, 1 lakh 50. How, sir, 1 lakh 50 came? Just now we computed here. This profit before tax 1 lakh 50, 1 lakh 50 and 1 lakh 50. Income tax PGBP computation, it adds back depreciation as per books of accounts. So I'm adding back how much? 50, 50 and 50. I'm not even going to the sum. I'm teaching with logic. Those who are studying first time will understand. So add back 50 each year. So you got 2 lakhs, 2 lakhs, 2 lakhs. Then I should reduce depreciation as per income tax act. Income tax act is allowing 100% depreciation. 100% of 1 lakh 50 will be reduced. Full asset. Now because first year I reduced 1 lakh 50 full depreciation, my first year as per income tax profit after tax as per IT books ends up at how much, guys, for first year? 50,000 as per income tax books. What about second year? 0. Because I provided full depreciation in the first year, income tax is giving benefits. Full depreciation in the first year. Therefore, second year reduction is 0. Third year also reduction is 0. Yeah, profit before tax, sorry. Yeah, profit before tax. Profit before tax is 50, 2 lakhs and 2 lakhs. Is this clear, guys? Have you understood what we have done so far? Again, I will repeat for the break. Basically, first year you added back depreciation 50,000 and I'm reducing depreciation 1,50,000. So profit before tax as per income tax is 50,000. But second year, you can't reduce depreciation because fully allowed in the first year. So second and third year, I will only add back depreciation. So profit before tax is 50,000, 2 lakhs and 2 lakhs. Now as per income tax, I will provide the tax rate 40% of 50,000, which is 20,000, and 40% of 2 lakhs, which is 80,000, 40% of 2 lakhs, 80,000. So 10% is 20,000 into 4, 80,000. That's how I got 20,000, 80,000, 80,000. So when I go back to my above statement, in a place where I should have had tax of 60, 60 and 60, I have tax as per income tax 20, 80 and 80. Sir, how will this affect, sir? Very simple. If I do as per books, my profit after tax will be 1,50,000 minus 60, 90,000, 90,000, 90,000. This is what will be same every year, correct? But this is not the value I am going to reduce. I am actually going to reduce what? 20, 80 and 80. So what will be my actual profit after tax for every year? It will be 1,50,000 minus 20. How much? 1,30,000. Second year will be 1,50,000 minus 80. How much? 70,000. And third year will be 70,000. AS 22 comes for this only. AS 22 comes and says, if a layman is reading these numbers, what he will think, 1,30,000 in the company profit after tax has become 70,000, loss making company, let me sell my shares. They will think like that. Now this is not a profitable difference. This is not because of operations of company. Look at the profit before tax. It was 1,50,000, 1,50,000, 1,50,000 equal. Because of tax as per income tax, it has become 1,30,000, 70 and 70. So because of income tax, my books should not have a wrong, true and fair view. I need to give a true and fair view. That means in the tax I have to do some adjustment. So what I'm going to do, I will come down and I will write, okay, what is the reason for this? I'm trying to analyze the reason. The reason is book profits before tax is 1,50,000 in all the years. Correct? We just know computed that 1,50,000 in all the years. But the book profit as per income tax changed to 50, 2 lakhs and 2 lakhs. How, sir? Above. Look at this profit before tax in the income tax working note. We took it as 50,000 because first year 2 lakhs minus 1,50,000 you have 50,000. Second year you have 2 lakhs and third year also you have 2 lakhs. That means as per income tax, the profit is only 50,000, 2 lakhs and 2 lakhs. Now, if the tax rate is 40%, if it is as per book profits, 1,50,000 into 40%, you would have paid how much? 60,000. Correct? I should have paid 60,000, but because of income tax into 40%, you are paying only 20,000. Correct? So first year, in a place where you should have paid 60,000, you are ending up paying only 20,000 because of 100% depreciation, and you saved how much? 40,000 in tax. That is nothing but timing difference. We have timing difference is the difference between book profits and income tax profits, which is 1 lakh. 1 lakh into 40%. 40,000 is the tax that is saved. Are you following, guys? In first year. So, apona, can I simply say, hey, 60,000 rupees pay panna vendiya edathla. The place where I should have paid 60k as tax, I am paying only 20,000 where I saved 40,000. Good, no, I have saved this year. But let's go to second year. 100% depreciation kudukra maai kudutittu அடுத்த வருஷம் செஞ்சு விட்டுருவோம். Okay. So next year what is happening? 1,50,000 into 40%. Again I should have paid only 60, but next year 2 lakhs into 40%, you will end up paying 80,000. Because of this, what is happening? In a place where I should have paid 60,000 only tax, you paid 80,000 as tax. You paid extra 20,000 as tax. That is nothing but difference between 1 lakh 50 and 2 lakhs, which is 50,000. So 50,000 into 40% is 20,000. I paid extra 20,000. Same thing repeats in year 3. 20,000 repeats. That means, the logically, if I see here, where I should have paid 40,000 this year itself, in other words, where I should have paid 60,000, you ended up paying only 20, so you saved 40. But if you go to next year, where I should have paid 60,000 tax, you ended up paying 80,000, you paid extra 20,000 in next to 2 years. So hello boss, this year by paying 20,000 you saved 40, but next to 2 years you paid extra 20, extra 20. So effectively, if you see, in as per books, all the 3 years is 60k, 60k, 60k. But as per Income Tax Act, first year income tax is 20,000. How we found 20,000, 80 and 80. So next to 2 years you are paying 80,000 and 80,000. If you see cumulative total, both will be 1 lakh 80. That means where I should have paid 60, 60, 60, you are paying 20, 80, 80. That means accountants are saying that is fine for income tax, but for me, the liability of today is not paid today and is deferred to the future. So what I will do, in my books of accounts, how they will present this? Yeah, in my books, we just computed tax as per Income Tax Act is 20,000, 20,000, 80,000, 80,000, which is leading to the problem in presentation, where the profit just now reduced. It became 1 lakh 30, then again became 1 lakh 70. So what he will do, what he's saying, tax, let it be 20, 80 and 80. This is as per working note. Next, again I will do less deferred tax. First year 40,000 more I will debit, so that the total becomes 60,000 and my profit after tax will become 1 lakh 50 minus 60. How much? 90,000. Second year what I will do? Second year I will, because I paid actually 80, I will reverse in this 40,000 20,000. So effectively I am paying only 60, and third year also I will reverse 20,000. So effectively I will pay only 60. That means all the years my profit after tax will be shown at 90,000. This is the adjustment that I am going to do as per AS 22. That means what entry you are basically going to pass? First year where you should have paid 60k tax, you paid only 20k. So you saved 40. Hello, it is not saving. It is a saving today, but it's a future liability. So I'm reducing by 40. So my entry will be P&L account debit 40,000 to deferred tax liability 40,000. Why liability? If I debit P&L, I have to credit liability only. So I'm creating liability for 40,000. Next year I'm adding again 20, so that negative 80 plus 20 becomes 60. So I will reverse this deferred tax liability to P&L 20,000, 20,000 in year 2023 and in year 2024. So this 40 will reverse this 2020 in next 2 years. Some will get over. Are you following, guys? Understood concept of deferred tax? Sir, exam and all, I can't do all this, sir. I don't have time for preparing one base statement, then preparing this, all of this. That's why I have one shortcut. Okay. I will tell, we have book profit, income tax profit. I told you logic. Now in RTP class, why all this, sir? What is the shortcut? What is the book profit in year 2022 before tax? Before tax, 1 lakh 50. இதுக்கு ஸ்டேட்மெண்ட்லாம் போட வேணாம். மைண்ட் இன் மைண்ட் 2 lakhs was the profit, depreciation 50,000, so 1 lakh 50. So I should compute this in mind because question is not having 1 lakh 50. What is income tax profit in year 1? Mind computation. Mind how I will compute? Okay, 1 lakh 50 is book profit. Add back depreciation 50. 2 lakhs minus 1 lakh 50. So profit before tax is 50,000. That also mind computation, or you do some working note. Okay. So what I will do for shortcut, book profit is 1 lakh 50. This you have to compute. Adukku working notes podno anyway. Okay. Income tax is 1 lakh, sorry, 50,000. Further you have to working notes anyway. Instead of this logic only, deferred tax liability or asset, I don't know, sir. For that, shortcut is book profit is 1 lakh 50, income tax profit is 50,000. Always what is correct is income tax. Income tax is correct. So from book profit I have to reduce to income tax. It's a shortcut. Always book profit wrong, always income tax profit correct. So from 1 lakh 50 I have to reduce to 50,000. So if I have to reduce my profit in books, I have to debit my P&L. I have to debit my P&L by how much? The difference of 1 lakh. If I'm debiting P&L, what I should credit? The only thing left is deferred tax liability. So always to find deferred tax liability or asset, shortcut is book profit is 1 lakh 50, income tax is 50. Wrong? Correct. So I have to reduce. To reduce in the books, you have to debit P&L. Therefore, I will credit deferred tax liability, not to the extent of difference, to the extent of difference into tax rate, which is 40,000. Are you following, guys? This is first part of the sum. Reversal next year, DTL to PNL, DTL to PNL 20k. Understood? So with this, we are done with the first part of the sum, where we found out deferred tax liability and passed the journal entries. What are the journal entries basically? To summarize the journal entries for you guys, in year 1, year 2 and year 3, year 1 the entry was P&L account debit to deferred tax liability for 40,000. Year 2 we reversed deferred tax liability to P&L 20,000, and year 3 deferred tax liability to P&L 20,000. Correct? This is what was done. This is what is there in the book also. If you see, first year they would have created deferred tax liability for 40,000, and subsequent 2 years they would have reversed 20,000 for each of the years. Okay. Now coming to the main part of the sum, the new addition. What will be the amount of deferred tax if the substantially enacted tax rate is changing for the 3 subsequent years? This is the key part of the sum, which I told is a new addition in the RTP. ICA study mat doesn't have this, but in our class we would have discussed this in concepts only. Okay. Now getting to a sum over here. Look how we are solving this. Okay, very simple. I'm trying to keep it as simple as possible. Sir, first year timing difference is 1 lakh. Second year timing difference reduced by 50,000, reversal. So the closing balance of timing difference is 50,000. And again the next year 50,000 will reverse. 2024, 31st March 2024, the closing balance of timing difference should become 0, because first year I'm creating 1 lakh. 2023 I'm reversing 50. Next year again I'll reverse 50, so it becomes 0. This is clear. Now first year what I did, sir, in first year out of this 1 lakh at a tax rate of 40%, we need deferred tax liability of 40,000. So you created, that's why you created year 1 P&L to deferred tax liability 40,000, and first year my ledger will look like this. In 2022 year ending, by balance carried forward, new closing balance is going to be 40,000. I hope this part is clear for you. So year 1 I have created a deferred tax liability. Now what is happening, guys, in year 2? If you notice carefully, year 2 the closing balance is 50,000, and year 2 the tax rate has become 35%. That means in year 2 I need to have closing balance of 17,500 after reversing from 40,000. That means my closing balance has to be 17,500. Then only I can reverse this after that in next year. So what will happen? In year 2 closing balance has to be 17,500, because year 2 closing is 50,000 into 35%, which is 17,500. Sir, how, sir, the 17,500 came? 50,000 into 35%. So year 2 order closing balance has to be 17,500. So look at the ledger. If first year balance is 40,000, if year 2 closing has to be 17,500, I will reverse 22,500. Why? In simple terms, you have more deferred tax liability than what is needed. In other words, 40% was created when tax rate was 40%. But for 17,500, only tax rate needed is only 35%. That means excess more than 20,000 has to be reversed because you created more DTL. I will reverse 22,500. Come back over here. Look at the entry in year 2. I will reverse year 2 entry will be P&L account debit 22,500 to deferred tax liability 22,500. Are you following, guys? Is this the correct entry? No. This is again creating for 22,500. My reversal means, I'm just checking if you guys are attentive, noticing here, guys. If this is the year 1 creation, the reversal has to be deferred tax liability to P&L for the same amount of 22,500. So of the 40,000, more, I would have reversed only 20,000, but I'm going to reverse 22,500 because I created more extra. So after reversing 22,500, I will be left with a closing balance of 17,500. So look at this. Second year I will reverse 22,500. I am left with a closing balance of 17,500. Third year again I will reverse that 17,500. Closing balance becomes 0. That's why closing balance of third year is 0. Tax rate is 38%. Deferred tax liability needed in third year is 0. Therefore no entry. In third year closing balance is not there. But third year also that reversal will take place. Third year, what will be my entry of reversal? Third year, this is year 2. Year 3 entry will be DTL to P&L 17,500. So basically, to summarize, first year I created 40,000, sir. Second year I'm reversing 22,500, sir. Third year I'm reversing 17,500. That's it. I hope you are following. Why I'm reversing 17,500 in third year? Because in year 2 end, my closing balance is 50,000 and my rate is 35,000. So the balance needed is 17,500. Because I need 17,500, I reversed 22,500. I hope you guys are able to understand, guys. So this is in crux. The end of AS 22 also kept this to the last because this needed some time to explain. With this, we are also done with our RTP. I hope all of you have understood. Thank you so much.